Hey everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Today, we've got a lot to cover as the markets took a hit yesterday, so let's dive right in. U.S. stocks came under heavy selling pressure on Thursday. Weak economic data and another sharp sell-off in chip stocks spurred losses across all three major indexes, just a day after the Federal Reserve signaled a likely rate cut in September. The tech-heavy Nasdaq composite led the losses, falling 2.3% after starting the day in positive territory. The Philly Semiconductor Index dropped more than 7%, with ARM holdings falling 15% after disappointing results. This dragged down other market leaders, including Nvidia and AMD, which fell more than 6% and 8% respectively. The benchmark Standard & Poor's 500 fell 1.4%, while the Dow Jones Industrial Average lost 494 points, or about 1.2%. Meanwhile, the 10-year Treasury yield dipped below the 4% level for the first time since February, hovering near 3.98% after several weak economic data points came in on Thursday morning. The interest rate-sensitive Russell 2000 index, which had been rallying over the past month as markets priced in a high likelihood of a Fed rate cut in September, fell more than 3% yesterday. The latest ISM data showed the U.S. manufacturing sector sank further into contraction territory during July. Other reports showed jobless claims rose to an 11-month high last week, and construction spending unexpectedly declined in June. Experts suggest that Thursday's market action reflects investors digesting recent economic data as bad news, despite potentially pointing to steeper Fed rate cuts in 2024. One expert told Yahoo Finance, "When yields go down, it could still be a good thing going forward if it comes from lower inflation, but not if it comes from higher unemployment, bad manufacturing data, bad earnings, and bad macro data." Slower economic data may have been good news a year ago when everyone was worried about inflation, but that's not the case today, they added. With a September rate cut from the Fed almost certain after Wednesday's policy announcement, investors on Thursday moved to price in even more aggressive moves from the central bank this year. Data from the CME Group showed traders now pricing in roughly a 25% chance of a 50 basis point rate cut in September, up from just an 11% chance one day ago. The next key data release will come today with the July jobs report, expected to show the U.S. economy added 175,000 jobs last month with the unemployment rate holding at 4.1%. Some individual stocks found a reprieve on Thursday after positive quarterly earnings reports, most notably Meta, which rose 4.4% after the social media giant reported better-than-expected results on Wednesday afternoon. That's all for today's Capital Markets Quickie. Thanks for tuning in. I'm Endrit Sella, and I'll be back tomorrow with all the latest market updates. Have a great day.